July minutes coming up tomorrow, but today we have retail earnings. Inflation expected to be a word we hear quite a few times when it comes to both. What are you expecting when it comes to both, and how do you see it impacting the markets?
Well, we'd have to say related to the Federal Reserve, I think, this is going to be, when we look at the minutes, it's going to be reflective of where we were earlier, okay, in July, which was reflecting really on June and all that was happening. And what we're really looking forward to here would be the Kansas City Fed Symposium in Jackson Hole, Wyoming. And that's coming up in the next week. So when we look towards the Fed, we think a lot of things are already known about the Fed. This will likely be some confirmation of what they were thinking of earlier this month. But we really need to look forward.
All right, so one of the things you hear on Wall Street very often is you want to sell on the news, but you actually think the news of the CHIPS Act is a tailwind for quite a few sectors, including industrials. Kind of explain the thesis there.
Well, related to where we're headed with the Fed, we think the Fed has shown remarkable sensitivity. It is sensitive both to the over 40-year levels of inflation that we've been experiencing. It has already had 4 hikes, and it's getting ready for a 5th in September. So what we think is it's trying to be sensitive to the effects of its actions. What we think it's likely hikes for longer, but yet at a more modest pace as we go forward. Perhaps we'll continue to see, this 75 bips type levels. It could go down to 50 in September. We'll just have to see what that looks like. But we think the Fed is actually our friend here as it navigates the course out of this overstimulated economy by both politicians and by the Fed itself.
All right, John, since you got a few friends over there at the Fed, I'm going to ask you to pull out the crystal ball for a second. Are you expecting the Fed to stay aggressive when it comes to inflation or possibly pivot?
Yeah, Frank, I think we're one of the few groups that really say it's not so much that the Fed is aggressive, it's just on the case, so to speak. TCB, like Elvis used to say, taking care of business. And as a result of that, we think that this is a good environment for a sector like industrials. You'd asked me about industrials. And with industrials, I heard what Dominic was saying, but I would also say industrials play a big role in terms of manufacturing. And manufacturing is getting a boost from the efforts of Congress just recently and the administration. You're going to see a lot of Build Back Better kind of action, that kind of thing. Also, when it comes to retailers, how do you manage inventories better? All of that, and shipping, all of that has to do with technology that is deeply embedded in industrial products, as well, of course, agriculture, which Dominic mentioned. So industrials cover a lot more ground. One of our favorite sectors we like here: consumer discretionary, tech, John, industrials, and financials.
John, we're almost out of time. I want to ask you really quick. Obviously, we're coming off 4 weeks of gains on Monday, but the future's a bit muted right now. What are you expecting for the trading day ahead?
Well, I think the key word here, or the operative phrase, is muted. I think, when you look at the futures, it's not really a worrisome kind of thing here. We could see some profit taking on any catalyst that bears skeptics and nervous investors see as an opportunity for taking profits without FOMO.